to Nirmal Bang, ladies and gentlemen. I'm Hila Tatia. We have with us Ria Singh, Senior Analyst Currencies, joining in. Ria, welcome to the show. Ria, post the FOMC meeting, we've seen a 75 basis point rate hike coming in. How has it actually impacted the dollar index and in turn the other global currencies?
I think the market was already anticipating the 75 bips rate hike. And, just before a day before the FOMC meet, we saw dollar index rallying beyond 107 levels. And once the rate came out, it squashed to around 106.19 levels. So we can understand that market is quite anticipating the next move of the Fed, because if you look at the past two meetings, they are quite clear that their decisions is number driven, is data driven. And unless they see some good numbers in line with their expectations with respect to the inflation and employment numbers remain strong, they'll keep on moving into the same path. What you can make out from the Fed speech yesterday was that he has not given any guidelines, much of the guidelines, okay, for the September meeting. He if the inflation remains or gives the surprise on the higher side, Fed will continue with the rate hikes. He has not talked about whether the rate hikes would be 50 or 25 bips, but he did say that a more aggressive stand could be taken if the headline inflation doesn't budge from the higher levels. But I think taking into consideration that he has acknowledged that there is economic slowdown happening, though he has said that he's not seeing any recession into the US economy, but acknowledging that the economy is into the slowdown right now is the first indication that we can take that Fed might go softer on the next rate hike that will be coming into the September. So I think dollar index, as far as dollar index goes, I think it will continue to remain on the stronger hold, because apart from the QT and the hawkish stand that the Fed is taking, there are other factors that is pushing the safe haven on the higher side. So dollar index will remain above 100 levels. 103, 105 is the max, is the support zone that we are seeing. It will max out at 109 on the higher side, but it will remain in the stronger hold going forward.
Okay. So overall, Ria, if you see in terms of the overall picture that we have right now, today we have the US GDP data as well that is going to come in. And that's a question that's being asked as well. What's the impact do we see on the dollar rate? Are we expecting it to come weak? If yes,
Yes, definitely. Housing market is down. The confidence numbers are down. PMI numbers are down. ISM numbers are down. So every numbers is coming, which relates to the how the economy is performing, is coming on the downer side, and we are seeing quite a steep fall into those numbers. So I think definitely, I think even for the second quarter, you'll see the US GDP numbers coming on the negative side, and we could see contraction again. On the dollar index, I think impact will be the same. Like I said, there are various other factors that is wrong on the global level. What will be, the thing we must understand is which currency will challenge the dollar right now? Will it be euro? Of course, if you look at the Eurozone altogether, they are juggling with their own issues, economy issues, political issues, energy crisis. Then we can come to pound. Now, pound UK again is going through the same phase. So EU zone, which could challenge the dollar right now, is into quite a despair situation. As far as yen goes, the whole stand there of the government and the central bank is completely different. The picture running out there is completely different. So none of the currency right now is challenging enough for the dollar to get it beyond 100 levels. So this is the situation why the dollar index will not move beyond the 103, 105 levels that we are seeing right now.
Right. So overall, Ria, what are the strategies that you would recommend?
The strategies that one can go forward with is going short into the USDINR, because RBI is scheduled for its policy meet on August 5, and we could see rate hikes again there. They have beautifully handled the volatility momentum, and 79.60, 79 levels could come into the USD INR on a shorter term before heading to the depreciating leg. So you can short USD INR for the August contract around 80 to 79.96. Keep a strict SL at 80.25, 80.30 for a target of 79.60, 79.50. You can also go short into the pound INR below the level of 97.16 for a stop loss at 97.50 for a target at 96.60. As well as Japanese yen and euro INR goes, I think 59.34 is the resistance that you can follow, and once it breaks out from that, you can go long. For euro INR, it will remain in a range of 81.54 to 82 levels. So a consolidation range could be there into the euro INR.
Right. So these are strategies that Ria is recommending as well. Thank you, participants. Thank you, Ramesh. I hope your question is answered on the currency end. I think gold and silver, Ria, would you want to take it, or I think we will have to leave it to the commodity experts?
I think Kunal sir will be a very good choice for that. But yes, for the precious metals, I think it's a no-brainer. You should go long right now with the recession fears and the other factors that is pushing the safe havens. So safe havens are into the major spotlight right now. Like I said, nothing to challenge the dollar index right now. So the same could be adopted. But yes, Kunal sir will be a better and much more informative guide for the precious metals.
Absolutely. I hope, Ramesh, we've been able to answer your query as well. But thank you, participants. Thank you, Ria, for joining in.
Thank you, Ira.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.